Well, welcome to 2020. Time to put that Yule log down and hide away the champagne. It's time to get this year started. And I wanted to kick off the new decade with some thoughts about market predictions and trends going into 2020. So I want to have a chat about interest rates, our thoughts on the next recession, impact of Section 24, and the impact of greater regulation on the buy-to-let sector, and also some generational opportunities that I feel are coming through the pipeline as well. So I don't know about you, but 2019 was the year that I felt like I was bashing my head against a brick wall. That the political indecision that we've had to deal with has been absolutely exhausting. Just watching the whole of our political establishment just rowing with each other and absolutely getting nowhere. So I was exhausted by it. And no matter what you feel about the general election, it's happened. We now have a government with a majority, which I think this is the first time in 14 years that that's happened. So first time in my real adult life that we have had that government with a mandate to really go out and make some decisions and make things happen. Whether or not you agree with those decisions or not is another matter, but they are going to be able to get some stuff done. So there's going to be change, there's going to be progress, but my real hope is that ultimately there's going to be balance because of the way the electorate's voted, the fact that the Tories have had such success in the north of England in the way that they've not had for many decades. I really hope will bring us a government with balance, because I think at the end of the day, if we can encourage entrepreneurship and the creation of more jobs alongside supporting those who are in need of our support along the way, we should be able to build something great. So anyway, against this backdrop, I thought I'd kick off with some market predictions and trends from all my hours that I spend geeking out on this stuff and loving Money Week. Just practical economics. There is some research that we've been doing over the years just to make sure we're really plugged into this. So let's kick off with house prices. So my feeling is, well, if over the last year, even since Brexit really, that the house prices, particularly in the south, have been very flat. Now I know there's some places up north that this has been a bit different for, but generally it's been quite stagnant. We've had some surveyors saying that the market's actually contracted in the area that we're in Kent by a couple of percent, but actually I don't really see the data to support this. I would just say generally quite flat or very marginal growth. I think Brexit is going to happen now on the 31st of January, but that's not as done and dusted though. So we're going to have the transition period beyond that, which is going to come to a conclusion at the end of next year. So my feeling is that over this transition period, whilst there has been some comfort, I would say, from having that majority government come into place, I think that some investment will be unlocked into the UK thanks to that. I still think there's going to be some trepidation, and until we're out of that transition period, I think we're probably going to see, again, very marginal growth. So even though that threat of a Corbyn-led government, which would be bad for many investors in property, we're still not going to see a huge surge in 2020 in housing prices. My feeling is that in 2021, after that transition period has passed, that we are going to start to see house prices start to rise more steadily again. I think there's been a lid on it because of the uncertainty, because of investors holding back, not being sure how it's going to play out. And my feeling is that no matter what plays out with what sort of Brexit we end up having, that just the fact that we know what Brexit we're having is going to be the thing that really makes the difference. So I anticipate a relatively flat 2020 in terms of house prices increasing. And then I reckon as we go into 2021, out of the transition period, complete clarity on what kind of situation the UK has, trading agreements with who, that I think 2021 is going to be a very good year in terms of house price growth. I think that's going to be a strong year, and I think that will continue through into 2022. Now, from the research that we have done in the past on previous recessions and the kind of broad trends that you see in the run-up to that, I reckon that we're going to be seeing the next recession sometime mid to end 2022. And that's because quite often when you have in the lead up to recession, you'll have like a bit of a boom as we had in the lead up to Brexit. Then things kind of calm down for a while, and then there's quite a big spike again, which becomes unsustainable, and that's what leads to a recession. There's always been different reasons for it, but that's what I reckon will happen after the certainty returns, after Brexit happens for good, transition period over, certainty, investment, pent-up investment comes in at a rate that's actually not sustainable, pushes up house prices, and ultimately I reckon, again from looking at past data, that's probably going to last no more than 18 months. And that will see some correction sometime in the latter part of 2022. If you geek out on stuff like I do, you'll have been aware of yields actually inverting. In the summer, I think it's in Denmark, you could actually take out a 10-year mortgage and actually get paid for the privilege of doing that. The yield curve's also inverted in the US, and that has preceded a number of recessions in the past as well. So I think things are a little bit unusual in the UK because of this whole Brexit situation, but I reckon that our money's on that. Which leads me nicely into interest rates. And I really don't feel, it's so funny, having looked back a few years ago, we were all waiting for that moment that rates were going to start to rise, and Brexit, and I think also the wider global uncertainty has really had an impact on rates and how they're going to go from here. My feeling is that because of the still continued lack of clarity and certainty, that I don't reckon rates will do much movement at all during 2020, during this year. Perhaps even we could see rates in terms of maybe not the Bank of England base rate changing, but perhaps we've seen some mortgage lenders even slightly reducing their rates. So in terms of what we can borrow out from a mortgage point of view, I think things may even still get slightly better, first of all, as banks vie to try and lend. So for us personally in our business, we're continuing, even with the fact that I feel quite confident that rates aren't really going to change much this year, and I don't think that's really going to see rate rises until probably 2021, just because of trying to keep the market stable. And even once stability does come back, everyone's so indebted. Everyone has really binged on debts, governments, corporations, personal individuals. So they're going to have to be very gradual with the rate increases to not just destroy everything. So it's largely flat this year, and then I reckon gradual increase starting from sometime in 2021. In terms of thinking more specifically about landlords and tenants, one of the most recent additions to the attack on landlords, because we are the most hated people at the moment, public enemy number one, the removal of Section 21. And there was a big hoo-ha when this was announced, and it looks like it's going to be followed through by Boris Johnson and his government. So the removal of Section 21, so the removal of no-fault evictions that landlords currently have to remove someone from their property without having to make a reason. The problem with this is that it would force us all to be using Section 8 proceedings, which you have to have a reason for, so rent arrears, antisocial behaviour, etc., breach of contract essentially. Now, that's going to push us all towards using that, of which is the whole court process around Section 8 is a lot more punitive, and it's not very landlord friendly. My feeling is that it is a great headline for the Tories to be able to say we're going to end no-fault evictions. In reality, if you look at the data, most landlords aren't using this just for the hell of it to kick someone out. We want to have lovely people living in our properties, and we want them to stay. So I reckon there will be a very large overhaul in Section 8 alongside this abolition of Section 21, and I actually think overall it will look like great publicity for the Tories bashing down on us evil scumbag landlords, but also on balance I think we'll end up with the same broadly the same kind of rights. Like if you want to sell a property, I think you'll be able to use a Section 8 in the future. If it's in poor condition, the whole thing needs redecorating, I think you'll be able to use a Section 8 too. So I think ultimately more of a headline grabber than actually really going to change all that much. That's my personal opinion. We are starting to see the real impact now of Section 24. So the abolition of being able to of mortgage interest rate relief for higher rate taxpayers. I'm sure if you are heavily invested in property, you're already aware of this. I think still a lot of very small landlords still lack awareness of this, but I think as the tax bill starts to bite, this will continue to change. I think the continued what would be the word, vilification of landlords, and also more regulation in the sector is putting off new landlords. New regulation does this. It makes it harder for new players to enter the market. So what I think we're going to see more and more of is very large landlords who broadly control the market, which I personally think is a shame. I think it's bad for competition. So less smaller landlords entering the sector because it's harder for them to do so and punitive for them to do so. And also a continuation of the more, what I would call like sole trader style landlords downsizing their portfolios. So ultimately, I think a bit of a contraction in the buy-to-let sector overall, which is ultimately going to push an increase in rent because there's not enough supply versus demand. So a smaller number of very large landlords, and whilst I think this will mean, particularly with the additional regulation, that we continue to see a professionalisation in the sector, I think it will also lead to a bit of a loss of heart in the sector as well, because I would say it's generally the smaller landlords who've got a few properties, they really care about them, perhaps because they used to be their own home, and they look after their tenants. Like, they're not motivated by the highest of rents. They want people who are just going to look after the properties that they perhaps used to live in themselves. And those long-term tenants are what they're mostly motivated by. So I think this is a loss for the sector as a whole, because landlords with heart are important. So the less and less personable landlords, as I would say, are going to be around, and therefore much more corporate and much colder, I would say, although generally higher standards. So I think this will bring opportunities too, more of which I'll come back to later on. But ultimately, this is going to have an upward pressure on rents, even if over 2020 we don't see a huge uplift in capital values, particularly in the south of the UK. Another trend that I think is really interesting for us all to pay attention to is the millennials. I think I count as one of them. But millennials are buying houses much later than previous generations. And I know there's always a lot of uproar in the media around all of this. But I actually had a really interesting statistic the other day when I attended the Money Week conference, Geek Alert. And it puts this in a lot of interesting perspective, because by the age of 30, in this generation, most people have worked for actually half the amount of time as previous generations. Half the amount of time. Because previously you used to leave school at 16 and you'd 16 or 18, and then you'd go out into the working world. Everyone didn't go to university, and it was actually Mr. Blair with his education, huge expansion in the university education sector, which now means most people go to university, which means that rather than leaving school at 16, you're maybe 16 or 18, you're leaving school at 21. If you add in a gap year or a postgraduate to that as well, you're actually not you're not entering the official working world until best part of your mid-20s. So whereas before, by the age of 30, you've been working for over a decade, you may well have only just been working for 5 years, or maybe even less. So actually, there hasn't been that opportunity to save up, to have the financial resources to go out and buy property. So I think that's a really interesting point to bear in mind, which I hadn't fully appreciated before. So home ownership is happening later, which means there needs to be a better supply, or a continued supply, of good quality rental accommodation for the millennials. And the millennials are a different generation to the ones in the past. They are of the, and I put myself as part of this, of the Airbnb, the Uber, the WeWork generation. It's the whole sharing economy. And actually ownership is less important to this generation, as actually is freedom. Freedom's the most important thing. So we need a rental market that can really serve this, and also serve the fact that careers change, location of work changes. So I feel that there's a real opportunity for one really great rental accommodation that also serves relatively short-term rental contracts where you move around for work. But also that sharing too, so co-living, perhaps combining co-working with that as well. Definitely a big trend that I think through the 20s, the roaring 20s, we're going to see more and more of. And going back to the earlier point about the wider professionalisation of the buy-to-let sector as a whole, and that meaning it's going to become a bit more corporate, I reckon, a bit colder, losing some of those personable landlords. I think a really big opportunity for those larger landlords who can find a way to still offer that human approach to the buy-to-let sector. So, and as an aside from that too, I think any landlords that can really make sure they're taking an active interest in the environmental impact of your properties, that is going to really become more and more important. It's important to the younger generations. Younger generations. So we need to make sure that our properties, we're not just complying with regulation, and obviously the bar is increasing for energy performance on properties. But I think if you can go above and beyond this too, and in Margate that just means making sure you can actually recycle. I know in the Stone Age, but that's really going to be a very important differentiation factor for those that are really embracing it. So that's my initial thoughts, my 15 minutes of thoughts to start 2020. I think we're going to have a really interesting year. I think we're going to make some decisions are going to be made. I'm going to make some decisions. The government's going to make some decisions. Things are going to be very different to what we've gotten used to, and I'm personally really excited. So whatever you're doing in your business, I hope you're plugged in to the market and you can take advantage of the opportunities that are coming. I wish you a very happy 2020.